stablecoins have evolved from being this kind of crypto native payment rail to, I think, the foundational infrastructure for all global payments. And it all started as a hobby with a couple of guys sitting at home and thinking this would be cool. We had grown fast. It wasn't any deliberate malfeasance on our part. We had just grown way too fast. No one had expected Bitcoin to go from 6,000 to 60,000 in the course of under a year. Our revenues had gone up by a similar proportion. Last valuation round was 8 billion. We IPO'd. I think we hit 100 billion. Everything was just blowing up and things broke. And the FCA let us know in no uncertain terms that wasn't acceptable anymore. Then it was just a case of, taking our punishment. We did what any company in any industry does when your biggest competitor goes bust, right? You go and try and win their customers by focusing on your strengths, the regulatory, the trusted, the compliant piece of it.
Welcome, Peter, and welcome everyone to the New Money Podcast, the show where we talk about crypto and hopefully find out how the future of money really looks like. As always, we've got the Lydian Lion behind me, the oldest coin in the world, and we've got an amazing guest, Peter, who joined Coinbase in 2020 to head up operations and strategy across Europe as the COO of the UK business. Kind of stuck with the business over, I think, one of the most tumultuous and exciting times probably in the firm's history, right? We've had the IPO, the FTX, we've had the bear market, and we've had the recovery. So a bunch of things that we hopefully dig into today as we dive into the episode. But yeah, Peter, great to have you on the show.
Yeah, thanks for having me. Excited for our chat.
I think this must be something of an anniversary. About a year ago, you left Coinbase and left crypto at that. Do you miss it?
Yeah, good question. I was actually talking to our general counsel last week and I was telling some stories about Coinbase. And halfway through, she just goes, sounds like you really miss the chaos. Yeah, some days you do. I think it's such a fast moving world, so much going on. It's sort of hard to know where to look sometimes, but it was an amazing 4 years. And I'm still involved, obviously, still working on a few crypto things, and through Creandum as well, we continue to look at the space. But yeah, feel good to be here, but definitely miss elements of it.
No, I appreciate that. And hopefully we can walk everyone through the Coinbase journey in Europe and UK today a bit, kind of like from starting up, building crypto in Europe versus the States, managing crisis, managing FTX, building Coinbase teams, and kind of then look also into the future of crypto a bit with stablecoins, of course, Ripple and Circle, what's happening there. So we've got a bit of an agenda, but maybe to kind of like set the scene, you joined as the UK COO of Coinbase, which was essentially back then, I guess, a startup inside a startup. Walk us through what you found as you landed on the ground and like what was there and what were basically the first couple of things you had to build up.
Yeah, that's exactly how we used to describe it. Startup within a startup. Coinbase, when I started back in 2020, it was about 1,000 people globally. But the European business was super small, around 100, just 2 offices, London and Dublin. More than half of those were customer support agents in Dublin. Really just kind of a sort of station point in Europe. And I came in to help expand and help think about growth there. And so a lot was going on at the time. If you know your crypto cycles, the end of 2020 was when the last bull market started and everything started to break. So revenues were hitting all-time highs, but at the same time, we had customer support backlogs going through the roof. I was getting LinkedIn messages every day, hundreds of angry LinkedIn messages from people who were complaining that their funds were trapped. Luckily for them, it was good that they were trapped because prices kept going up. So we said that's a feature, not a bug, but obviously a terrible customer experience, but we had to work through that. Regulators were waking up to the dangers of crypto and unregulated crypto, so spending a lot of time with them. I'd say when I started, crypto in Europe we kind of did the analysis and it was maybe 4 to 6 years behind the US, just in terms of trading activity, number of customers, penetration. So what we really wanted to do was educate people and bring them along on the journey and get them to catch up. And the other thing we were behind on was that given it is money and trust is so important, a lot of the local champions were already pretty embedded. So you had companies like Bison in Germany and Bitvarba in the Netherlands, Bit2Me in Spain. So we had to come in as an American company and, show them why they could trust us and why Coinbase was the place for them to store and hold and buy their crypto. So there were a lot of challenges in the early days. I think the final one was just being a US company. It's a bit of a cliche and a stereotype, but international was just viewed as this big monolithic block. So it was like, why don't we just do no KYC in Europe? Because Europe's not regulated, right? Europe's the Wild West. But why do we need to get licenses in Europe? They don't need to. So a lot of that was internal education as well, of explaining, the compliance first approach needed to be global and not just US focused. So yeah, a ton of things to break down in the first 6 months or so.
Yeah, so much to unpack, man. And I think let's double click on the Europe lagging 4 to 6 years behind. 4 years later, you left the business. Did that analysis hold true? Like, was it just time, or is there something fundamentally different about the market, like larger, more aggressive, that in the end made the States kind of like have a different quality to it, even after that time kind of like passed?
Yeah, great question. I'd say Europe caught up, but it was still, let's say, 2 to 3 years behind, and I think continues to be that way. And then we did actually start doing analysis of, what are consumer behaviors like? What percentage of people hold money in stocks and bonds? What percentage of people trade? And it's significantly lower than the US. I think in the US, we were looking at 50, 60%. And in Europe, obviously, it varies a lot by country, but we were going down as low as 10, 15, 20%. So it's very hard to, get people from holding their money under the mattress at home, which isn't too far removed from what a lot of people are doing. At worst, or in a bank account earning 0.5% or 1% at best, to getting them to trade in crypto. You're sort of getting them to skip a whole stage in the investment journey. So that was a challenge as well. And that's why I think, we try to look at other opportunities to grow beyond just trading. I think that's why the successful companies today who are working in crypto and blockchain are really focusing on the infrastructure, trying to even abstract away some of that complexity, especially in places like Europe, where there is a little bit more conservatism when it comes to money. You don't have that sort of YOLOing degen trader archetype that you do in the US with Robinhood and meme stocks and all of that sort of stuff. So I think, yeah, part of it was bringing people along on that journey. But I think you make a great point that Europe continues to be behind, and it's just the nature of Europe versus the US.
Yeah, and I mean, like, I'm German, right? And even within Europe, we're probably notorious for that kind of keeping the money under the mattress behavior.
Yeah, you guys are the worst for it.
We probably are. But did you manage to kind of like get a couple of these folks to take their money from under the mattress and put it into Coinbase, or were it mostly already these kind of like crypto lit up folks? Like, how did the kind of typical Coinbase Europe user look like back in the day?
Yeah, so I mean, when I first started, it was pretty much just the degens. It was either the very tech forward people or the traders, the gamblers. But over the course of the few years, we did do that. Germany was actually the first market that we expanded into after I joined. We got the license with the BaFin. We hired a team out there. We really localized the product to give Germans that comfort. And we educated them on simple financial concepts, dollar cost averaging, showing them like returns on crypto over time, showing them less volatile assets. Stablecoins was also a part of that, especially as interest rates started shooting up in 2021 and beyond. And so showing that they could get a better return holding their USDC than they could in their bank accounts. Yeah, we definitely saw a shift in the customer profile over the course of the few years.
Let's double click briefly on this meme of the US company coming to Europe, and it's kind of like one country, and international is viewed as this block. I mean, I think Brian was pretty outspoken at one point that international was a priority, right? And if you want to onboard 1 billion users, it's hard to do that in the United States. I do think like 80% of crypto activity happens outside of the States today, right? So all of that makes sense. Maybe walk us through kind of like Coinbase's international strategy. I've heard one of the folks we talked to preparation for this call, I've heard about something called like go deep and go broad strategy. How did that work?
Yeah, and I think Brian was, visionary in many ways, and that was one thing. He obviously was very focused on being compliant. He knew the value of having an international base. I think the US is still the biggest market for trading, but in terms of everything else that crypto and blockchain unlocks, the rest of the world is where you want to be. And so, yeah, we brought in an exec called Nana Murugesan. He came up with the go broad and go deep strategy, which sort of was a way of identifying our priority tier 1 markets, where we would offer the full product offering, get the licenses, etc. And then just for the rest of the world, just make Coinbase available, whether it's a self-custodial wallet, which needs less licensing than a fully custodial product, or just being out there and letting people through whatever ways or means access the tools and the capabilities to increase their economic freedom. So there was definitely that. I just think at the end of the day, and this is a challenge, especially when you become public, right? 80+% of Coinbase's revenue was coming from the US. The US was still growing faster. So it did end up drawing a lot of the mind share. You talked about the meme, and I worked in the US for 6 years. And so I sort of had the US centric view myself. And then when I got out of it, I was just like, oh, wow. For example, we were looking at one point to find a new jurisdiction in Europe because we had to move some of our customers out of our Irish entity. And so we were exploring different jurisdictions, basically because of new EU regulation that was coming in. which meant that those customers couldn't be in the EU anymore. So we were looking at all the usual international candidates outside the EU. And one of the Coinbase execs sent a message in the channel saying, hey guys, I had a good idea for a country we could move into outside the EU, which has a friendly regulatory framework. And we were like, oh, okay, what is it? We've been doing this analysis for 3 months. And she came back and she said, what about the Netherlands? So that just kind of showed like the challenges that we were facing. And then it got even worse with FTX, right? FTX was growing like crazy, taking our share. We had the US telling us, like, I looked on LinkedIn, FTX have 2 compliance employees. Why do we have so many compliance people? Like, why can't we be more like them? So there was that constant tension. But I think, again, all credit to Brian. We stayed true to the core mission and the core values and survived. And obviously the FTX thing ended up being terrible for the industry, but good for Coinbase in the long term.
Yeah, no, appreciate that. And I think this is such an interesting conversation, right? I had Bobby from Bitstamp on the show earlier this month. And a point that he really drove home was that they, as one of these local champions that you talked about, right? Mm-hmm. They kind of leaned into local compliance and local regulation early on. And that was, and it still is kind of like their asset and their positioning. But at the same time, it took a long time till they got credit for it, right? And it cost them speed. And in times they lost market share to kind of more aggressive US or Asian entrants, which just weren't as cautious and by the book, right? Like, what was your feeling, I think, as somebody also who's like in some sort like involved in the liability of the leadership team towards the regulator and kind of pretty exposed to these kinds of things? Like, how did Coinbase manage to strike that balance of speed versus diligence and being buying the book here?
Yeah, well, it's interesting you talk about liability because that was something else, right? You had our regulated entities in Europe and Germany and the UK, and you had local people on the board as well as the US folks on the board. And the local people were a lot more concerned about their liability because I'm a British citizen based in the UK. If I fuck something up, then the FCA is going to come after me. I could get fined and go to jail. If you're sitting in Los Angeles, then you probably don't care so much about never being able to work in the UK. So that was another kind of tension. But I think, at the end of the day, it made good business sense, even exactly to your point. And I think what Bobby said is totally correct. Like, even if in the short term, you're not capturing every single dollar and capturing the maximum potential share of wallet, if you take even a medium term view of it, it's always gone the same way, right? Fintech, banks, financial institutions, regulation comes in, and the ones who keep up and stay regulated have the competitive advantage. So yes, in that kind of interim gray period where it's not clear what the regulation is, you can really make a lot of money. But as soon as it comes in, and if you're creating a generational business, you're going to have to be able to stay ahead of that. So that was always the thing. And there was always that slight tension again. But as local people who had the additional stick, I guess, of potentially going to jail if we mess things up, we were always trying to remind people of the carrot of, creating a sustainable business versus doing something that would only make money for a year or two before blowing up, like an FTX, for example.
Yeah, and we're going to talk about FTX in a second. I think this was really something that when we did some prep calls for this show, kind of lots of your former colleagues highlighted that the FCA relationship in UK, it was, I think, from day zero, basically, there's this very intense thing that needed lots of care and attention and needed to be built out very intentionally. If you had to describe the relationship with the regulator, kind of like from 2020 and starting out to kind of like the moment you left, like how did that evolve and what was your strategy in shaping that?
Yeah, good question. It brings back some memories. I think early on, so I'll split it actually. So we had the regulators in Europe, in the EU, where we were trying to get licenses. And I talked about Germany. We hired very credible local people on the ground there to help us with BaFin, with those strong relationships. And it was all about communication, constant communication, engaging with them, talking to them, having meetings with them, giving them the time needed to educate. Likewise, we did the same with the DNB in the Netherlands. Brian himself hopped on a phone with them just to explain his vision, his mission, tell some interesting anecdotes from his past. And so that was how we got the new ones on board. In the UK, which I was particularly to maintain, obviously, as a board member, I remember we invited some members of the FCA to our office for an initial meeting. We said, hey, we're Coinbase. We'd love to strengthen our relationship. We had an e-money license in the UK, not a crypto license. Coinbase has that now, the VASP registration. And we just got grilled. It was like, oh my God, it was like being told, I felt like I was at school, 13 years old. I'd messed up. My parents had been called in. The head teacher was there shouting at me. And we just sat there and we had to take it, right? We had grown fast. It wasn't any deliberate malfeasance on our part. We had just grown way too fast. No one had expected Bitcoin to go from 6,000 to 60,000 in the course of under a year. Our revenues had gone up by a similar proportion. Last valuation round was 8 billion. We IPO'd. I think we hit 100 billion. Everything was just blowing up and things broke. And the FCA let us know in no uncertain terms that wasn't acceptable anymore. Then it was just a case of, taking our punishment and meeting with them. Same thing again, meeting with them regularly. Anytime something would go wrong, proactively communicate. Don't try and hide anything. And by the end, it was a much stronger relationship. We were visiting them regularly. They were inviting us to policy meetings. We were helping them shape their thoughts around regulation. And so we got to a good place, but we had to put in the hard yards. There was no way around that.
And let's talk about these ups and downs, right? So you went from like 8 billion pre-IPO to 100 billion post-IPO, and then FTX happened, right? And I think this is something that I think lots of people told me from the industry that before FTX really, really blew up, I think that there were like teams looking into like, what are they doing? Why are they making so much money? What's the secret sauce here? How did you view and perceive FTX before all of the shit hit the fan, basically?
Yeah, we had charts internally. I mentioned it. Number of compliance employees per product employee or per engineer. And, at Coinbase, it was about 1 compliance person per 3 engineers, more product and engineer. Binance, it was like 1 for every 5. And FTX, there were like 2 or 3 compliance people on LinkedIn. And we thought either they're embarrassed to be working compliance at FTX or they just don't have a team. And for a long time, we were worried. We were like, these people are growing really fast. But I think generally within crypto, there was a sense that it wasn't all kosher, right? Like they were in Bahamas, SBF was giving those sort of crackpot interviews. There was a sense of like, these guys are doing something right, but they're probably also doing a lot wrong. And that's going to catch up with them. So we sat there, we were patient, we just waited to see what would happen. And I remember the day that it exploded, like internally, everything. You can imagine the Slack channels, everything was blowing up. And that's the cool thing about crypto as well, right? Going back to your first question, something I miss is like the instant access to information through Twitter and crypto Twitter and just like, and how quickly that then turns into memes and rumors, which then kind of spin off in other different directions as well. So you have to have a strong bullshit filter for it as well. But when that all started happening, I don't think anyone who was sort of familiar with the industry was massively surprised by it. Maybe the scale of it was surprising and how quickly it all unraveled. But the whole thing with CZ kind of pulling the cord on them and then that back and forth, I thought it was like theater. I'm looking forward to watching the movie about it. But it was fun to be on the other side. Obviously, we were concerned that this would just completely destroy any trust that was left in crypto. A few things had happened before that as well. We'd had Terra Luna. There had been some 3 Hours Capital where there had been some pretty high profile challenges in the industry. And so that was the thing. We kind of thought, okay, if crypto survives this and Coinbase survives this, then we're going to win. And for a few weeks, it was sort of touch and go. I think Bitcoin went back down 16,000. But then again, it washed out a lot of the bad players and the time came to build and to focus on going back to the long term. So ended up being for the best, I think, for Coinbase and the industry.
Yeah, I'd love to talk through the kind of like the FTX response and maybe just like briefly the immediate moment, like walk us through that day. Like what did you guys do? Who talked about what? And then also like the longer term response, like how did the next months look like? And was there a strategy to how you would then also seize that opportunity in many ways?
Yeah, so short term, it was like I said, we need to make sure the industry doesn't die, right? The industry at that point was on life support and it was just like, what do? We put Brian in front of cameras. We put him in a suit and tie. So Brian was going out, his normal dress code is a black t-shirt, pretty casual, black t-shirt and jeans. Brian was suddenly appearing on MSNBC, on Fox Business, on everything you can imagine, suit and tie, explaining why FTX had happened, explaining that it wasn't a crypto problem. Nothing had been hacked. The blockchain technology was secure. This was a case of, as you always have had through years of history, it was a case of bad actors doing bad things and getting away with it. And actually, this was a case for why we should have regulation in the US and we should have regulation in Europe and countries that want to do this properly because they had been operating out of a low regulation jurisdiction. And that's why they had got away with so much of it. So that was the sort of instant day one response and week one response. Alicia as well, the Coinbase CFO, incredibly strong presence in front of the media and investors, just going out there, reassuring people it's okay. This is what's happened. This is why it's happened. But Coinbase is here to stay. And then longer term, we did, everything that a smart company do. We used blockchain analytics to identify FTX customers. We offered incentives. We reached out to people. A lot of FTX customers were those high volume, high value traders. A lot of them, unfortunately, did lose money, which eventually most of them got it back, but they were in a difficult position. And so we cultivated those relationships, and we did what any company in any industry does when your biggest competitor goes bust, right? You go and try and win their customers by focusing on your strengths, the regulatory, the trusted, the compliant piece of it. So yeah, I think it was a well executed response, I have to say.
So former peer that we also talked to before the conversation kind of told us this was this mind-numbingly intense period of time, right? We've got now after this all unfolds, we've got obviously FTX playing out, and now the bear market ensues and everything is down again. So layoffs are happening and still growth has to continue. The regulator is probably extra intense in the aftermath of these things. And so what really stood out in kind of like the prep conversations to this show is people said that many people came to you during that period of time, kind of like to get some guidance, to just talk and to get some calm and peace. What's your kind of like recipe for managing crisis and managing stress and kind of like just staying cool during these moments?
I was definitely feeling pretty stressed internally at the time. There's no one secret thing. I think I got given some advice a few years ago when I was living in San Francisco, working at Bain, which was just that as a manager and as a leader, you just need to be a stress absorber. And not a stress amplifier. Those are the two types of leaders. And I've worked with a lot of stress amplifiers who take the stress and just push it all out to you and push it out to their team, and the team quickly crumbles. And so for me, it was just like, it was highly stressful. I talked about the growth up to 7,000 employees. Another year later, we were at 3,500, two big layoffs, as well as a lot of targeted layoffs. Things got very political, very tricky. We had, like you said, every regulator was emailing us, calling us, asking us what the hell was happening. So employees, customers, investors, partners, I did a bit of business development work. They were pulling deals. We had been talking to a couple of Premier League football clubs and a Formula One team about doing stuff with them. They didn't want to touch us anymore. So it was a tough time, but yeah, I think it's just about keeping perspective as well, right? Like at the end of the day, this is why we do what we do. We like the excitement and the adrenaline, and we're at the forefront of a new industry, which is, it's going to break stuff and things are going to go wrong. But if we believe in it, this is exactly where we want to be, right? And then we'll be talking about it on a podcast 4 years later. So that's why you have to just sort of pull back and take that longer term perspective and that's hard in crypto. It's like I was saying with Twitter and social media. It's just like, oh my God, everything's burning, everything's falling apart. You're like, your newsfeed is just absolutely flooded with catastrophe and FUD. And so it's difficult, but you have to go, wait a second, like nothing has fundamentally changed from a week ago or a month ago when everything was great. Like nothing, it's still the same industry. It's the same people. We've got the same mission. So why do I suddenly feel, or why am I trying to be made to feel so stressed? And that kind of helps a little bit.
I love the stress absorber and stress amplifier kind of like point of view and kind of the cultural levers you can pull. Let's talk about economics for a second, because I think Coinbase IPO'd at 290, and then January 23, I think it was at 30, kind of a tenth of the value. Like, how do you keep teams incentivized, and how do you talk to your teams about that part of their compensation?
Yeah, Coinbase is the only publicly listed company. Well, I worked at HSBC, so yeah, I don't even think of that because the HSBC share price is so steady. You're getting your dividends every year, you're 4 or 5%. It might go up 5, down 5, but you wouldn't even check the share price for 6 months, 1 year, because that is what it is. And then here, your net worth is like doubling or halving in the course of 2 months. You're like, okay, I need to downgrade my plans for my new apartment next year, or the opposite. I think it's the same thing. You sort of have to take it for what it is, and what you've signed up for. I think in terms of like motivating the team, especially more junior members of the team, when it's the first time they're going through this, and a lot of people, like, do the numbers, right? We went from 1,000 to 7,000 people during the bull run. That means most of those people joined when the price was at $300+. So they came in with their nice sign-on grants and everything, and suddenly and a lot of them had given up lucrative jobs in traditional fintech and banks, or not fintech, but traditional finance. So banks and stuff, where they're getting their nice nice big base salary and bonus. So that was difficult as well. And you have to remind people why did you come here? And you have to, and then again, it's look at the longest cycle. You look at the last 20. So when I first got into crypto was in 2017, just before the last bull run. And I bought more and more during the bull run, and then it all crashed. And, that went from 19,000 to 2,000 or less. And everyone thought that was the end of the world as well. So again, it's just about riding it out. And sometimes you win on it. Sometimes you lose on it.
Yeah. And to that point, right? Like a year and a half later, the stock is back up at 210 or something like that, like 7x, 8x. What happened in those 18 months? Like what were the main drivers that you were also concerned about to kind of like just get that back on track?
Yeah, I think the dust just settled a bit, didn't it? Like people started talking about crypto and blockchain in a more grown up way. And you started hearing about more use cases, and you started hearing about stable coins, and people were talking about payments infrastructure. And suddenly it was just like, okay, tokenized treasuries. Okay, there's some value here. And then of course you still have the pumps, you have the meme coins, but I think you're seeing that those windows are becoming almost shorter and sharper. So you'll have Trump coin and everything goes up, but then everything like kind of settles down again a week or two later, versus like that extended 6 months pump and then extended 6 months drop. So I think what you're seeing is a more steady course and a little bit more stability in the industry. And I think Coinbase has shown itself to be able to innovate, things like Coinbase's layer 2, which is going to hopefully form the infrastructure for a lot of those payments, global payments to creators, micropayments, etc., because it is cheap and it is fast. And then you're seeing a lot of startups being built on top of this and looking at this space and, building the infrastructure of it. And I think that's what then people go, okay, so Coinbase, yes, it's still first and foremost a trading platform, but actually what is it fundamentally? It's a crypto and a blockchain play. And it's shown that it can do institutional, it can do retail, it can do stable coins, it can do wallets, it can do custodial, self-custodial. So then you're more betting on the technology rather than individual coins or a group of individual coins. And I think that's what you've seen with the share price.
Yeah, I think it's such an interesting thought, right? I saw this slide from Coinbase earnings recently where they had like the service subscription and service revenue kind of like, I think, kind of singled out, and that went like 50x over 5 years from 40 million to like 2 billion. Was there like a deliberate effort kind of like internally to drive these non-trading revenues to just be like more resilient also for the next bear market?
Yeah, no, totally. And that was a big thing that we tried to do in Europe, because going back to your initial line of questioning, we were like, we're never going to persuade Europeans en masse, and nor do we really want to become these kind of degen day traders. But, they can be persuaded that staking and earning 6% or 7% on their ETH is a good place to put their money. That was a big target for us, was to get subscription services to over 50% through the subscription product Coinbase One, through staking, through USDC, and all these other things that actually are a lot more sustainable and as you said, resilient to the market downturns.
So one last question about kind of like the inner workings of Coinbase. And I think we talked about your approach to leading these teams kind of like through, as you said, like unknown spikes for a public company. But what about the kind of like individuals and the talent? I think what really stood out, and like we're talking to a bunch of Coinbase folks when we're hiring people, I think Coinbase has really built, I think, a pretty unique talent vortex and talent brand, right? I think we've had this whole thing that Brian is reviewing every single hire. Yeah. I think there are 100x Coinbase startup founders. Like what made that special, and what did you kind of like take away from that period of time from a talent point of view?
Yeah, the talent density thing was incredible. There was a guy, he had worked as a contractor with us for 6 months, junior ops guy, an ops associate. He was brilliant. He'd been at Revolut for 2 years. That was his entire career. And then come, and I thought it would be a no-brainer. I was like, great. Our previous ops associate left. I was like, let's bring him on. And I got told, nope, he needs to go all the way up. Brian or Emily need to approve him. And I was like, but he's been here 6 months, we know. And it was frustrating at the time. But yeah, I think having that high bar, every interview process would have a bar raiser interview at the end, which was basically a veto, even before it reached Brian and Emily, of like, will this person make the team significantly better? Will they raise the bar on Coinbase overall? And I think that just attracted good people. And good people like working with good people, right? So it becomes a bit of a flywheel effect. People want to be part of those teams. And it's interesting because now, as you said, I'm I'm not in crypto anymore. I'm with a very talented group of VCs, but like I've spoken to friends who have gone to other crypto companies and, I won't name any names, but other crypto trading companies, the Coinbase's competitors in the US and elsewhere. And they're like, wow, you notice it. You notice that the caliber at Coinbase, whether it's legal, whether it's product, whether it's design, is just incredibly strong. So I think not compromising is the key. And you can do that these days, right? You've got AI. You don't need to. Coinbase going to 7,000 in a year and a half, that would never happen again. No one, both because people have learned from that, but also because CEOs and founders now know that you can do more with a lot less. And so you don't need to compromise on quality. You don't need to be hiring 6,000 people in a year and a half, which inevitably is going to mean that you don't keep that talent bar high. So yeah, I think that's some of the things that Coinbase did well.
Was 7K the peak?
I think it hit just over 7K. Yeah, there was a target to get to 10K by the end of the year. And then I don't know if you remember, but it all started with, it was pretty terrible. It started with rescinding offers. So I think about 700 offers got rescinded, literally some of them 2 days before they started. And then 3 months later was a 25% layoff. And then another 6 months-ish later was another 20% layoff. So
how do you do those well? Like, how do you do layoffs well?
It's hard. And it's hard to do at scale. If you're going to be laying off 1,500 people all at the same time, like, how, because I was going to say it's the personal touch, right? But you can't have a personal touch with 1,500 people. So I think it's just about approaching it with empathy. If you're having to do layoffs to that scale, you have to admit that you've made a mistake. So I think there has to be that humility to say, look, we messed up somewhere. And unfortunately, you're the one who's impacted by it, but you've seen it done wrong so many times, right? It hits the press and it's just like, it's so bad for the brand. So I think to me, it's like doing it the least bad way you can rather than doing it well. I think doing it the least bad way should be considered success.
Did you guys hit that balance?
First time, no. I think first time it was pretty haphazardly executed. Again, things collapsed so fast that everything had to move fast. Second time, I'd say it was a little bit better. We learn, right? Everybody, you sort of learn with experience.
You live, you learn. You lay off 1,000 people. No, I appreciate that. Let's talk about stablecoins briefly, right? I think like we all saw the Circle IPO filing where basically everyone learned that Coinbase makes as much money from USDC as Circle does. I think it's close to $1 billion in kind of like stablecoin revenue for 2024. How do you feel about that relationship and how do you feel about stablecoins on the platform? Like what role did they play in Europe? How do you think about US dollar versus euro stablecoins? Like what was the general thesis on that one?
Yeah, I mean, I've always loved stablecoins and I think USDC, the USDC story is just amazing, right? It was a couple of engineers come together. There wasn't even a formal agreement between Circle and Coinbase at the time. And that only actually happened during my time there. So for a long time, it was just it was a hobby project on the side. Coinbase had these, what they call extra 10 projects, which was like, oh, this would be cool. Cause it was the zero interest rate environment. You back in whatever it was, 2017, 18, 19, no one thought that you were going to be able to make billions of stable coins. And then if you look at the market cap of USDC and Tether, it's unbelievable how much it's grown. USDC took that hit after Silicon Valley Bank. And then interest rates obviously helped as well. So I think my thesis is that in the same way as USD dominates fiat and flows of money, USDC will be the one that dominates crypto stablecoin flows. We did a little bit of work on like becoming, the Amazon of stablecoins. Let's have a euro coin and a pound coin and a Brazilian real coin and a Turkish lira coin. A little more challenging, not just for regulatory reasons, but also just a little bit more difficult to get that traction and get that liquidity that you need. I think now, you'll see with interest rates coming down, and you're seeing it already with Bridge and Visa and MasterCard and BVNK and all the rest of them, you're going to have to start looking at other ways to make money off your stablecoin, not just the super simple business model, which is you give me $1, I'll give you 2% and I'll put it in the bank and get 5%, right? Like the net interest margin business models. But I'm a big fan of how they improve and increase money flows across borders, especially, and across I think the real future potential is going to be those tier 2, tier 3 currencies that aren't as well served today, and the micropayments and paying creators and paying suppliers and paying customers, or all that sort of thing, which there's still a lot of friction around today.
To double click a bit on like and I didn't know this actually, USDC as like a side project. Like, how did that work? Just a couple of engineers who were friends with each other said, okay, we'll build something from Circle team and implement it into Coinbase distribution, and then that just happened, or?
Yeah. So at the time, I mean, I'm trying to remember it, but I think at the time it was sort of, hey, what if dollars were coins like everything else. And okay, and then a couple of engineers from Coinbase. And I actually think because of sort of for regulatory reasons, Coinbase couldn't, mint and burn themselves. And so that's where kind of Circle, well, there was the consortium that was sent up. It was the center consortium between Circle and Coinbase had the distribution, obviously, with the customer base and the brand and the trusted name. And Circle didn't yet at the time, so they set up Center. But yeah, it was very much considered like, oh, this is a fun thing to have. It's more of a gimmick than anything else. And then it just goes to show how crazy this world is, right? Like right now, I'd say it's the number one thing that everyone's talking about. And stablecoins have evolved from being this kind of crypto native payment rail to, I think, the foundational infrastructure for all global payments. And it all started as a hobby with a couple of guys sitting at home and thinking this would be cool.
Now it's crazy. And the Amazon for stablecoin play, like what was the vision there? So that was kind of like being a prime broker for stablecoins and having the liquidity on platform to exchange these stablecoin assets in multiple currencies and just mirroring traditional FX markets for stablecoins, or like, what was the problem statement and kind of like envisioned solution there?
Yeah, but pretty much it was, okay, how big is the FX market today? It's in the trillions. What if all of that was moved on chain? That was the constant question at Coinbase, right? Like, what if this could be on chain? What if social media could be on chain? What if your professional networking could happen on chain? And there's companies for all of this stuff. I think some of them it's just too challenging from a UX perspective, but crypto is payments, right? Blockchain is the transfer of money, making it as easy to send money as it is to send a text message or an email or anything else. So yeah, the thesis was pretty simple. This is $1 trillion market. There's 100+ currencies in the world. If all of those currencies moved on chain, and actually, obviously things have changed in the last few months and years with globalization, but the thesis, and I mean, it's the cat's out of the bag. We're not going to go completely back to just local economies, but there's going to be more and more global transfers of money. And so if that was on chain and was instantaneous and 90% cheaper than it is today, that's still a probably $1 trillion plus market. It felt like an easy one from a sort of thesis justification perspective. Obviously, the practical implications are a little more challenging.
Those being regulators not allowing it, they're not being liquid local stablecoins, or
regulation's the big one. There's currency controls in a lot of countries. Coinbase sort of quite famously had a lot of challenges in India going in, where again a bit of a misstep. It's what you learn as you grow. Spoke to a few Indian ministers, seemed like they had given the green light, did a big launch with a big publicity in India, and 2 days later got shut down by the Indian government. And we were like, because Coinbase had a few Indian execs as well, who went over there, Surajit, the chief product officer, and we were like, but we spoke to ministers. You guys said it was fine. It was like, no, those guys said it was fine, but they're not the ones who make the decision. So a lot of countries are very paranoid about their money flowing out of the country or flowing in and them not being able to oversee it. I mean, China's obviously very much building their own CBDC and then wanting to keep full control over it. That's one of the challenges you run into, even in countries that are more relaxed about it. You like the EU, with MiCA, it's difficult to offer interest on it, if not impossible. So that's one of the major perks of it that goes away. Regulation, I think I'd have to say most regulators are focusing on stablecoin regulation first and foremost now. I think MiCA started with stablecoin regulation. The US, obviously, Sachs, the crypto czar, has said that's going to be the focus for them. But it is still not regulated in a lot of places and in a lot of countries. And there's a lot of scams, and you just need to get that up to speed. And then I think liquidity, that can be solved, right? Because if you've got it up and running and you've got enough of it and all the flows are moving onto it, and there's clever other ways of doing it, right? You look at kind of how decentralized exchanges have done, the likes of Uniswap and stuff, and providing yield and potentially tying up some of your tokens so that you can provide liquidity pools, automated market makers. There's ways of doing it. So I think once the regulation's all resolved, you'll see a slight increase, but the big one's going to be these governments that just don't like the idea of this at all. And some of the biggest countries in the world and the biggest currencies in the world fall into that category.
Quickfire questions. Peter, what's the second best exchange?
The second best exchange? I'll go a bit Vavo because Mark's my friend.
What's the best move Coinbase ever made?
Best move Coinbase? USDC. Creating an environment that allowed people to go and create USDC. I think having that, builder mentality, which, even at that size and at that scale, keeping that and instilling that in your people, I think is a good move and will continue to pay dividends.
If you had to be the COO for any other fintech, which one would you pick?
Can I say Ivy?
That's too kind.
There's a ton of fascinating fintechs. Stripe is amazing. I mean, that's a whole different level, right? But yeah, still love fintech as a space.
What's something you've changed your mind about on recently?
Crypto related. I think the value of tradition, I've been thinking about this a lot in a few different ways, but the value of traditional ways of reaching your customer. I mean, we're doing a podcast. I'd say that this is a relatively new way of doing it, but I've been reflecting on this a lot for various different reasons. But yeah, how you reach your customer and how that's completely changing in this increasingly crowded world with things like AI, with the different tools out there. I think there's going to be a step change in that. And I've been thinking that even in VC, which is a more kind of traditional industry, like that has to change. So yeah.
What's the new world?
I think the new world is just going to be, you're going to have to, I mean, I've talked a lot about the noise, right? On crypto Twitter and stuff. There's just going to be noise everywhere. It's not just going to be Twitter. And so reaching out, authenticity, somehow creating that direct connection, creating those touch points, whether that's in a fintech, whether that's in a VC, just cutting through everything and being original and being innovative in how you do that and giving people those real tangible experiences. I think it's funny, we're moving on to this so online, on-chain, virtual world, but I think actually the big value there is going to go back to sort of the bread and butter, even way back before the current iteration, which is kind of real in-person stuff, events, things where you can see, hear, feel, touch, smell the kind of the people, the products, the leaders around you.
Watch us do the podcast. What's the biggest short on public markets right now?
Biggest short on public markets. I think Tesla's got a bit of a way to go down still.
And if you had to hold one asset for the next 50 years, which one would that be?
Next 50 years, got to be Bitcoin, doesn't it?
Got to be Bitcoin. We got to cancel that question. Everybody answers the same thing. Peter, thank you so much for being on the show. This was lots of fun. I learned a lot. To everyone who's listening, feel free to like, subscribe, whatever you can do on all of these good platforms, and tune in next week. We do this every week. And Peter, see you soon.
Nice one. Thanks, Bailey.